Nitin Jain, Head of Retail Capital Markets at Edelweiss Financial, joins us. Nitin, what is driving pharma stocks today?
I have not checked out the market today, but I think generally it's the same. I think euphoria around the election outcome, I think, which is driving the large part of the market. I'm sure someday some sectors are moving up, but this is largely a broad theme, which is that the market is betting on a very positive outcome on the elections and hence on the economy.
Within after the crackdown that we saw in IT all of last month, finally IT has begun to make the move upwards. How would you approach the sector now?
No, I think it's a great opportunity actually, because see, if you look at the large cap IT stocks, stocks like Infosys, stocks like TCS, stocks like even Tech Mahindra for that matter, I think these are very high quality organizations. A quarter here and there should not matter so much from a valuation point of view. But it was a overowned sector for a long time, because if you remember, there was a phase of 6 months where I think the IT stocks did 30-40% on an average. And hence, when there was even a slight amount of disappointment, I think the stocks corrected 10, 15, 20% depending on what you're talking about. I think now at these valuations, it looks very, very attractive. I think IT as a pack looks very attractive from a long-term point of view. It might still be a slight underperformer if from a 3 to 4 month kind of horizon, particularly if the election results are favorable and the rupee strengthens further, which will put some pressure. But if you can ignore that hiccup, and if you can ignore that volatility and stay put, I think over the next couple of years we should do reasonably well. 15 to 20%, I think compounded should not be an issue for these companies.
Do you think cyclicals have run their course? Is it time to switch? Is it time to now jump off the cyclical bandwagon?
No, again, I mean, it completely depends on what kind of horizon you look for when you put in a trade. If you're a short-term trader, I would still stay put. There is enough momentum. But I would hardly, or I would not suggest for new money to go in from a speculative mindset, because I think from a short-term point of view, I agree with you, they have run their course. But having said that, if the economy revives, and that is what the whole market is betting on post-elections, I think some of these stocks can easily be 3-bagger, 4-bagger in a couple of years. So I'm not sure whether they have run the course from a long-term point of view, but from a short-term point of view, maybe they are a little stretched, and I would be a little cautious now.
Nitin, the election verdict is still about 5 weeks away. Before the election verdict, we have Q4 numbers. What is the importance of Q4 numbers? Because in general, Q4 numbers are not going to be strong. Do you think markets can afford to ignore Q4 numbers?
I think market will, unfortunately, because I think there's such a big macro event ahead of you. So from a large market point of view, I think a small deviation in the results will hardly make a difference. There would be stock level phenomena. You would see some of the stocks like Infosys and a couple of other bellwethers. There people would have a lot of focus on, but I think they might be 2-3 day phenomena. But everybody is currently hooked on to the outcome of the election, and I think rightly so, because I think quarterly results are only a small fluctuation from a broad trend. But if you get the broad trend right in terms of election outcome, then I think the gains or losses to be made there are significantly higher than what the results can contribute.
So Nitin, leave us with some stock ideas that you at Edelweiss are recommending to your clients to buy even now.
Sure. See, on the large cap space, I think there are enough interesting ideas. Stocks like L&T, stocks like some of the banks, some of the private sector banks, ICICI Bank, Axis Bank. I think most of these stocks are trading at reasonable valuations despite the run-up. I think after the run-up, the stocks are trading at 14-15 times earnings. And don't forget, I think you have gone through a big cycle where the earnings have got significantly depressed. If there's an earnings uptick, then you will get a double booster in the sense, you will also see better earnings, but also along with better valuations. And hence, this is actually a great time to buy some of these stocks for long-term players. Very easy to see some of these stocks trading at 2 to 3 times in 3 to 4 years. So L&T, ICICI Bank, Axis Bank, even for the matter, as we discussed earlier, IT stocks like Infosys and TCS, And if you are a little, or if you have a little more risk appetite, then you can go down the market capitalization space and look at some of the mid caps. In the mid cap space, I think there are a few very, very interesting ideas, and whether they will play out immediately in the next 3-4 months, not so sure. But if you have a medium term horizon, I think stocks like Repco Home Finance, it's a small ticket home loan company, giving great return on equity, trading at reasonable valuations. It's been one of our preferred bets for the last 6 months. There's a stock called Motherson Sumi, hardly a mid cap now. It's already inching towards becoming a reasonably sized company, but still a very exciting story. We are very, very bullish on that stock. We think it can easily be a 2-3 bagger again. So these are some of the ideas that we've been talking about.
But then if you are of the view that an Axis Bank or ICICI Bank could be 2-3x in 3-4 years, some would argue that is misplaced optimism. For these banks to become 2x, 3x, a lot has to change on the economy, for the country, for the investment cycle. NPAs have to dry up completely, fresh investment cycle has to start. As of now, there is no evidence of that.
You're right, but just go back maybe 3-4 months back. I think Axis Bank was trading at $800. I think there was similar kind of pessimism, and the stock has moved just 50-60% in the last 5-6 months. I think we tend to underestimate how markets discount the future very quickly. I think this entire NPA story is for real, I think, but the market has already factored a lot of it in. And I think there's a big if the election outcome is positive, I think things can change very, very quickly. Go back and see what happened to the currency. I think at one point it was complete gloom and doom, 68.70 where we were trading, and you thought that India's current account deficit is completely out of control, nothing can be done. But things changed. I mean, things changed overnight effectively. 4th of September was the day. You go back and see the charts. From there on, I think a lot of emerging market, the currencies have taken a huge beating. But our currency is still at 59.50, and I am very sure very few people 4-5 months back would have betted on that outcome. So the point I'm trying to make, or a limited point that I'm trying to make, is that things can change very, very quickly in India, and these are very strong management trading at 1.2, 1.3 book. And I have seen some of these high quality banks in a reasonable optimistic scenario. I'm not talking about very, very optimistic scenarios. I'm talking about reasonably optimistic scenarios trading at 2.5 to 3 times book. And don't forget, these companies are creating a return on equity of 20%. So now you're saying in 3 years, any which ways, the book value will nearly double. And if the valuation gives them a little bit of a kicker there, it can easily become 3 times.
Nitin, good chatting with you. Really appreciate you taking the time out and speaking with us.